The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento, so if you don't mind, I'm going to do the commodity hour. I believe Larry's away, so I said, you know what, I can do this hour. I had to make a few real quick things going on there in the last 5 minutes just to be able to do it. It's my pleasure to be here, and I would love to look at certain things based on the Chapman Wave methodology. I'm going to be looking at some of the commodities. How about that? So let's just run right away, and we'll go into the ES Minis. That's the March futures, trading at 1846 up 375. And right now, I'm looking at this, and then basically, let me just put it this way. In my Chapman Wave methodology, you look for the lowest low bar to start a count, and that lowest low bar in this case is 1732 on the 5th of February. And from that moment, you can merely count each successively higher peak, and you go to peak A. That was, leg A was on the 19th at 1844.50. You have to wait for a lower high bar. That's the whole bar must be, the whole top of the bar must be below. And in fact, it was. And what happened the following day on the 20th, the high was 1840.25, 425 lower, and that makes a peak. But the next day, it went right back up. It went to 1844. That still counts as A. The moment it goes above 1844.50 to 1844.75, because the futures trade, the minis trade in 25-cent increments, that starts leg B. That leg B went all the way to 1856.75 on the 24th, but the 25th had a lower high. It didn't go to 1856.75 or higher. Instead, it went to 1851, the round number high, and it pulls back. That makes peak B. I'm anticipating over the next couple of days that we're going to get leg C above 1856.75. And then, in the methodology that I use, it should go to at least a D. The Dow itself, I wonder if the YM, I haven't finished the YM, updated it. Yeah, the YM is the same. The YM, which is the Dow futures, is at peak B. I'm suspecting that we will go to a leg C and then a leg D, and the Dow itself, which is already at peak C, will go to a leg D and then maybe an E, even an F. And then we've got to anticipate sometime in the early part of March, could be next week, could even be the following week, I'm not sure yet, but that early part of March, I see some kind of a top unfolding. And I'm not going to say a top of consequence. Why? Because as long as there's a rotation into a sector or the sector's weakest areas as catch-up, in this case I'm looking at maybe housing sector or materials, the lower price ones, the stocks could play catch-up. You've got a rotation and money will find its way back into the market. However, if, in fact, there is a power move and the Dow spirals above 16,650, and right now it's at 16,221. That's 400 points. But these things happen these days. You can't exclude that fact. That would be different. I'm not anticipating it. I think we're getting to an area that says you've got a lot of resistance coming up. The move that we've just seen is emotionally, I almost feel like it's a counter-trend move. I can't really define that. I've been trying to work on it for days. I've been trying to figure out internally what I'm thinking and why I'm thinking it. We are long in my opening call. It's my service is called the Opening Call Daily Comprehensive Newsletter, and I look at all these different indices with the currencies, gold, doesn't matter what it is, the NASDAQ, or whatever, and I do an analysis, very comprehensive, and we have our positions that we have, which get updated every day. New positions, or we changing positions, or we taking profits, whatever it is, or the stop loss was hit. So in this particular instance, I'm looking at this and I'm saying, you know what? I can't quite define it, but I'm seeing moves in the stocks like Tesla that are aberrations in a sense. I'm not talking about whether they should or they shouldn't be there. I'm just looking at the chart and I'm saying, whoa, a breakout like that? Something's going on. Round number high of 265 yesterday. I'm going to put this because it's an alternate wave count. It's either G or it's a C. And the Chapman wave makes a big difference, but I'm just putting it in so it's clear. And the weekly chart, stochastic is just becoming, it's just at 94%. MACD's looking good. These are the technical tools I use. All I can say is, hey, fantastic move. I don't quite understand why so many stocks are having this kind of crazy setup with spikes to the upside. I wonder if Baidu is doing that. Whoops, I typed in Baidu instead of in the wrong section. There we go, put it in there. Baidu. No, just a normal chart with Baidu. Doing very well. All right, so all I'm saying is I have the parameters, and the parameters are pretty clear. Most importantly, let's just run this down because I never get a chance to do it. I was looking at LC. Live cattle. I know Larry had spoken about it before. I know Andy had Hecht had spoken about it. I said I did an analysis of this about a couple of weeks ago. I did a whole bunch of the commodities. It's not my area of forte in the sense that I do not trade them, but I do the analysis of them all the time. You'll see that the letters are way higher. That's because this is the continuous contract and it gets smoothed out. So in this particular instance, what I'm looking at is that we're in leg D with a potential doji D. It says you're getting close here to some kind of a top in live cattle, continuous contract. But it's outstanding action. Stochastic at 80%. MACD's holding well. I suspect that 145.5 should be really close to the price. Let me just put in LCH. LCH, I'm not even sure the trading H's now. H would be, let's go LCM. There you go. So this is brand new A, B, C, D at 135. Yeah, leg D. This is getting a little tight in the daily. 133 to 132 will be the support that really has to hold. If it breaks under 132, I can see cattle taking a little bit of a breathe here and going down to the 130 to 129 area over a period of 2.5 weeks to 3 weeks. But at this particular point, holding very well. If it does break to the 135 area, I'm sorry, 135.50 to 136.30 area, that'll be very strong move in the weekly. I do have to go back to my continuous contract because it's notated so clearly. And this is going to be leg F or brand new B in the weekly chart. Everything here is very strong, but it's really I spoke about this some time ago. I said that 200 period moving average in the monthly chart where live cattle broke down back in October of 2005. This is the first time it's touched that line. That's really important. It says that that line is now a magnet. In a moment or two, meaning a monthly chart, it's going to turn into either it's going to break out or become a repellent. You've got to be careful. It needs to decisively close at least 1 month in the next 2 months coming up above 145. It really needs to close above 147.50. To determine that is now a magnet line and it can start trading above and below. And that will be the trading range that it'll set up going into May, June, for somewhere between 147 to 150 and with a low in the 134 area. That could be a big, wide trading range for cattle. I wanted to do, let's see, I wanted to do KC. KC is coffee. I had a great buy signal on it, still got a buy signal, and now I'm going to say, if coffee in my continuous contract goes 1 penny above 181.25, that starts leg D. I'm anticipating it's going to do that. Now, using the same premise of the 200 period exponential moving average, this thing coffee hasn't even been close since it broke down back in 2 years ago in February. at 248 was the high, and that was the last time it saw the 200-period moving average. This is a fantastic move to the upside from the 90-something area, 100. Well, it's a continuous contract. Let's call it the 109s to today's high of 178, and 3 days ago that was the recovery high of 181.25. This line is going to become very important. I think a bulk of coffee's move has been made. Now I think it's going to start wiggling around that particular level. I would be, if for those of you, I know some people that have got calls on this, I would start to lighten up. If it makes, right now, between now and a new recovery high of 181.25, I wouldn't get out of everything. I'd definitely start taking some off, because this is extended, but it's still very good technical action, and just money management says it's worth taking a little bit off, keep your core. So that's coffee. What was the other one? Joe was the one. So Joe itself, J-O, is the yeah, it's exactly the same thing. The ETN, not the ETF, but the ETN says getting real close to some kind of a consolidation, 35.59. It should go to what, 36.03 or higher. That's D. And then I'd be a little bit careful, take something off, and 33 to 31.82 will be key support over the coming 3 to 5 sessions in coffee. That's based on the ETN, Joe. And I had a question in the den. Would I look at SCTY? And that is, of course, Zuckerberg's company called Solus, not Zuckerberg, the other guy from South Africa, where I'm originally from. This is Mr. Tesla, Elon Musk. And he owns this, at least his part owner. Leg D in the monthly, getting somewhat extended, Solar City. Leg E in the weekly, getting a little bit more extended. And the reason why I say that is that the on-balance volume and the relative strength are really at areas that often precipitate turnarounds to the downside. But the daily chart is really your rudder, and that's only in peak C. And just like coffee and the others, it should make a leg D above 88.35, and that takes me into next week. So I'm saying next week's going to be a really interesting week. Potential turnarounds. It doesn't say you have to do that, because I'm staying long until I get my signals. Well, we do have one short. That's just a nibble short, a starter position. And so SCTY is at 86.17 and up 124. I see it going higher. I see it going above 88.35. And at that point, money management would say to me, take something off or raise your... In all these cases, I would either take something off or I would raise the stop on a partial position in maybe a trading stop or commensurate to the move. If it just sneaks over 83.35 to 83.37, I'm saying that's for leg D. That's a tight fit. That's close to maybe pulling back. But if it has a power move and it really challenges 89.50, then I'm saying just raise your stop. Let it take you out. So I'll be back. And Danny asked, Ken, what sector would you short? I'm going to be talking about that when we get back.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a license to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi, folks. This is Basil Chapman. I am the host of the Tiger Technicians Hour, 11 o'clock till 12, just before Larry's show, Monday through Friday. And my service is the opening call, very comprehensive daily newsletter that goes out every day by starting early in the morning, and then by 8:25, my final chart goes out to my site at TFNN. And that is the Trader's Corner, and that has all the positions, plus a very brief paragraph that is an overview of what we're expecting for those of people who don't have any time at all. And you just want a brief summation of all the stuff that I've done, pages of stuff that I've done, and you want a very brief synopsis, and then I give about 15 to 17 bullet points of either what we have, what we're looking at, or what we're wanting to buy. Now, do you put a chart? Question that I had: why do you put chart of ES on the show versus the S&P cash? All right, good question coming up. I'll go to that question from Gary, I believe it is, and it's a question more from my show, but I'll do it in a moment. I had a question from Danny, who wants to look at copper. I'm going to do the continuous contract, and one of the reasons is the chart is always exactly correct, but how can I put it? But the price will change. In other words, if I have 3.1290 as a low back on the 19th of December 2013, now the low is 3.0975 because it gets smoothed out. So I usually try to avoid putting in prices. I put dates. The date is exactly right. That was the low. Then what happens? It gets smoothed out. But in fact, the patterns almost, I've gone through these charts in great detail, and I find the patterns are really very, very close. It's really, my methodology is based on higher highs and higher lows, and that's as simple as that. Therefore, the pattern should remain the same, and as Larry always says, we do chart patterns here, and what we're looking at here is that copper has pulled back from the 200-period moving average, going in a very quick peak ABCD. Remember, my concept is find the lowest low bar and merely count each successively higher peak. It should take you to at least a D. If it fails before that, it can give you a restart, a whole bunch of things. But basically, I look for 4 higher peaks, and you've got to be careful. Can go to 5, can go to 6. So in this case, it goes to 4 higher peaks with the long-legged doji on this 18th of February, and then it pulls back from the 200-period moving average under the 9-period moving average. It's really just stuck. I'm not that interested in copper right at this moment, but if copper starts to stabilize and not go under the low of the 11th of February, in this case it's 3.1710, that's what I've got for the continuous contract, that'll be good. My feeling has been strongly for months, I drew this chart pattern in ages ago, that this lowercase h pattern is going to go to an M pattern and just keep going, wiggling along, and I'm a little disappointed in copper because I want copper to be very strong, because that is international buying and building, etc. And therefore, this is a little disappointing, and it's something that I want to watch real closely and could coincide with if copper starts to break down, certainly if it goes under 3.10. Let me just do the HGH for now. That's the March contract. If copper March contract goes under the most recent low of the 3rd of February at 3.1750, if it breaks under that, that's going to be very negative because it also breaks an uptrend line. So I think it's stuck in a trading range for now. We'll see what happens. So just on the upside, 3.25 in the contract itself, the March contract. That's the only way. If it can get there real quickly, can it break this long-legged doji of yesterday? And it has to close about 3.2755 will be a little bit positive, which will be quite positive. A close below 3.2210 will be rather negative. So that's the way I'm looking at it right now. All right, so we've got callers online. We're going to go to Marty in Worcester. No, Al, we do not spell Worcester like it's the English, that character Worcester that we used to see on public television, Wooster. It's Worcester, Mass, but we do say Worcester, Mass. Marty, how are you?
Pretty well, sir. And in fact, there's another odd spelling right next door in Leicester, Mass. Which is correct. Yeah.
Leicester. But in fact, in England, a lot of people do say Leicester instead of Leicester. So you never know. Yes. So, Marty, you wanted to look at?
SNH, Senior Housing REIT. It's based out of Newton, and I can't tell. It could be bottoming. It looks like it might be a good entry, but there isn't enough of information to count the peak because it's just coming off a bottom.
I'm going to do this one. It should be fully notated here. It was one of our stocks in my opening call, and I got out of it quite quickly, actually, because it just didn't seem to be behaving all that well. I'll be right back with Marty in Worcester and Dave in Duluth, Minnesota, straight after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
We're all back, and I'm Basil Chapman sitting in for Larry Pesavento. It's my honor to be here, and we're on with Marty in Worcester, Mass. And Marty is looking at SNH. This is Senior Housing Property Trust. As I said in my opening call, we had this as a long, but not for long. And I can't remember, just offhand, I tried to find it in the break. I just said it was not enough time. One of the reasons is that I made a fairly tight stop, and I was very comfortable either taking a tiny profit or a tiny loss. I just can't remember offhand, but I did get out of it, and then I said to myself, keep it on your list, and then I forgot about it. So I'm real pleased that Marty brought it to my attention. Marty, do you have any position at all?
Not yet. I did have last year, and then it tanked with the bonds, and I got out with a little profit. And I was thinking, if we are getting near a market top, if it goes with bonds, it just might go up for a few months. Well,
I was looking at it during the break in terms of its history. The daily chart had a spectacular move back in September of last year from 2192. It went to 2 buy modes to peak D above the 200-period moving average. And then, as often happens with that 200-period moving average, it went to 2535, two days in a row. It had 2535 as a high. And then it came down, and it came down in a pattern I call the Eiffel Tower. Looks like an uppercase A, straight up and straight down. I'm suspecting, based on the technicals, that this move that you're looking at right now, 2203, this is a move that has a little bit, and I think you're absolutely correct, putting them into the same category. The TLT has been rising. In fact, the TLT is acting quite well, being right now at, this is bonds, folks, a 20-year Lehman bond at 108.42, up 50 cents. playing around with that 200-period moving average up and down and over and about. So I'm going to make the suggestion. It's from Newton Masters Company. It looked to me, everything I read about it was very appealing, but chart, price, and pattern to me are the most important things. I'm going to make the suggestion that if you're interested in this stock, and I'm getting back to being interested in it, just we'll see. And right now I need a couple of things to happen. I would take a little nibble here at 2204, and 2157 is the 9-period moving average. If it hasn't even tried to get to 2157 by Monday afternoon or Tuesday morning, and by Tuesday afternoon you're looking at a stock that's either gone to a new recovery high, even if it goes to leg D, I'm looking at a stock that's saying the weekly is finally showing a divergence that's very positive between the MACD and the slow stochastic, and the price that came down and the technicals that moved higher. There is a volume spike. Now, I do a lot of work with volume, but it's on-balance volume. I do a lot of work with volume spikes. In fact, I included it in my Master Trader series, where volume, if I get what I call a cascade to the downside, with a volume spike that is way bigger on a percentage basis than anything before, and this one wasn't, but if it was, in fact, if this volume spike, instead of being in the 15.5 million category back in the week of the 14th of February, was up in the 27 area, I would have got a volume spike that said you can move up 28 bars from that low, as long as you don't take out the low of 20.70, and you move above the previous peak and hold that, and that would be 22.95. So that just missed working out. It was a close call, but that's the way I use volume, what I call, they are cascading volume spikes. The price collapses to a significant low as price moves up to a significant volume upthrust, and that's usually you've got rid of all the shorts and you've got at least a pretty darn good. We had that as a trade, I think, earlier last year with a bounce in gold that lasted about 28 and then went to 50 days or something like that. So now what I'm looking at is, I think that's my recommendation. I would nibble on a position right now to get a real feel for it, just small enough to know that you have it, but not enough to make any dent at all, even if it suddenly collapsed and went down 10%. Just a nibble. But I would tell you what I would do. If it started to strengthen and this V-shaped pattern continued and it was determined to try to get to the candle of the 31st, 2272, over the coming, I'd give it until next Wednesday to do that, as long as it doesn't close below 2157. I think this is going to have a nice move to the upside. Hope that helps you.
Thank you. Thank you, sir.
Thank you very much for calling, Marty. It was good to hear from you. Let's go to Dave in Duluth. Hi, Dave. How are you?
Hi, I'm cold. How are you doing, man?
Well, I'm very cold, but it is sunny, and I think I can feel it in my bones. We are turning a corner, but it's a very long corner.
Hey, I just want to wish you the best of health for your future and everything going forward.
Well, thank you. Well, I'm going to do the same with you, and we all want to have good health, and I'm doing my best, and we'll see what happens. But thank you so much. I appreciate that. You'd like to look at?
GG, I think the gentleman on the line misunderstood me. I was talking George, not Google, but...
I've got GG in front of me. Okay, that's no problem. We've got Google, right?
I want to ask... Yeah, I don't want Google. I want GG.
Yes, a nicer looking chart right now, yes.
Yeah, it looks so like it never wants to come back a little bit. I'm looking for an entry point assistance from you.
Oh, so you don't have a position in it. All right, folks, Gold Core has had a fabulous move on a weekly and a daily basis, not a monthly basis. The monthly looks terrible, but going from 20.54 to the most recent high of 28.13, that's a great move. Now what we're looking at is, you remember I speak a lot about the 200-period moving average, so what I'm going to suggest is this. When a stock is very difficult to get into, but it's showing all the characteristics of buyers coming in and the chance not just of moving higher, but the chance of holding support very well. To me, that's even more important because the weekly chart is making higher highs. It's got an inside bar from last week. We've still got a day to go. And the most important thing about it is that the MACD went very quickly to 90% in the weekly chart. The MACD went very nicely expanding its histogram, those vertical lines between the fast-moving average and the slow-moving average. And the stochastic has gone to 90%, but it's done that before. It did that very nicely back in September when it had a very big move from about 22 to about 32. But then it turned around almost immediately in the weekly chart and it turned down. This one looks like it has the potential to flatten out, and that's what you want to see. You want to see the stochastic on any pullback hold above, I wouldn't say 80%. In the weekly chart, this has to hold above 86 to 85%, and preferably by midweek next week, any little corrections done, and it's trying to get to 91 to 92% in the weekly chart. Here's my recommendation. I'm going to suggest that normally I would never do this because it's had a spectacular move, and you can see a pullback of 2 points and 2 points on the $27 stock. You know, you're getting close to 8%. That to me is a big move. I don't like to hold for 2 points down on the $27 stock unless it's a very small position. It's a starter position. It's a feeler position, and I know my plan. So you can do one of two things. Either you can just have the patience. I suspect if you have the patience, you're going to get it between 26.41 and 25.62, and perhaps the low bar of the 13th of 25.46. That's the clue. I think somewhere there, if you have the patience over the next, maybe 3 to 5 sessions, I think it will get there, and I would start a position there, but because it's had such a big move, if it does come down below the 200-period moving average, you've got to be prepared that it might take a little time, and it might take a little more price, but from that level, a 1-point stop, which is what I would have, a 1.20 stop on any starter position, I would say I'm comfortable with that. So one of two things. You can either just nibble here at 27.55, and if it breaks out and goes above 28.13, you never know. It could have started a new move to a brand new leg B instead of a leg F, and that would be very positive. At least you're in the stock, not making much, but at least participating, comforting, but not that satisfying. Or you can nibble. I'm sorry, yes?
What you gave me a price of possibly 26.51, and then you had another one in the 25.63 area?
It's 26.41 to 25.62, two key moving averages. Okay. That's the area that I think if there is a consolidation that Gold Core, GG, trading at 27.53, up 42 cents. That's the area I think will be the containment area. It coincides with the weekly chart of 25.63 of the 9-period moving average. I don't know if it'll even get there because there seem to be buyers coming in on all the dips. But that's kind of where I would say it's a safer entry point. But I would also give the suggestion that you could just nibble a little bit here and then implement your plan if it comes back down. At least you're participating, but don't get carried away here. I wouldn't.
I feel patient. I've been looking at the chart on this thing. It looks just like it's just a steady, strong, mountain climbing, experienced individual who doesn't take little fallbacks and sit tight and just keep plowing ahead.
Yeah, except those are the people that sometimes take a moment to pat themselves on the back, and the moment you take your hands off the wheel, that's when you hit the tree. So there's always that one moment where you can have a little dip, and you want to be ready for that little dip.
Okay. Can I ask you another one? I heard your comments barely today. I was too much noise in where I'm visiting. You were talking about Tesla.
You know what? Marty, I'm going to go to my next caller. Because he wants to talk about it. So let's do two things at once. So thank you so much for calling. Good luck with the gold core trade.
I love it. Thank you.
Thank you so much for calling, Marty. I appreciate it. Marty in Worcester, Mass. Let's go to William in Singapore. William, how are you?
Oh, I'm great. Thank you. Thanks for picking up my call, Basil.
It's my pleasure.
I would like to ask you a question regarding Apple. And, what is your directional view? Because I look at today, since there's going to be a reversal, might be taking higher, but I'm not sure. That's why I'd like to ask for your, directional view.
So I need to just quickly ask you a question, and that's going to be a very simple one to answer, yes or no. Do you have any position in Apple at all right now?
Yes, I just turned on a long position on Apple options.
So you have options. You do have options right now. You have calls.
Yes, I have a call option. I just got a call option at 530 strikes. Next
the 530. Oh, okay. All right. I'm pleased it's the 530. I would have preferred if it was the 525, but 530 is fine. I'll explain why. Apple right now is trading at 525. I've just this moment. I don't know if you used any particular techniques. Do you use Larry's methodology at all?
Yes, I do use his methodology.
Okay, so I get a pattern looking at my 120-minute chart that says that Apple, for the very first time in a while, has got a signal that says it has the capability to get to the 535 level, and based on the stochastic and the MACD turning up here, but it'll only do it on one condition. It doesn't have any time whatsoever to pull back. Any pullback, 522 is absolute max. If it goes under 522, the whole concept of a bounce here going to the 200-period moving average, back again to the 532 to the 535 area will be negated. So I love the move in Apple right now, very quiet market. And this is what I'm saying. There could be a rotational market starting next week where all the laggards that didn't participate at all, like perhaps an Apple, has a bounce. Looking out, I don't particularly like Apple. I think Apple's got a problem and it's stuck in a trading range. But for you, a trading range, you couldn't care. All you need is 5 points and you're making real good money, right?
Yes, that's right.
So, okay. Now, this is the way I would look at Apple. It's trading at 526. On the 120-minute chart, this is still leg A. I don't have time now. A, B, C, D, A. I think it's A, B, C, D. A, B, C, D. It had 3 buy modes to D, all the way to 551.19 on the 18th of February. Now it's come down, but it's come down and held very nice support right at the gap that it had back in the 6th of February. So I like what's going on right now. If you don't mind, I'm going to take one moment. I'm going to grab a smaller chart. Where's my 30-minute chart? Right. I'm going to go to the 40-minute chart right there. So Apple, APPL. There it is. Oh, I love this. Apple's in leg B in the 30-minute chart. The 200-period moving average is what it's fighting right now. That 200-period moving average is at 526, and today's high so far is 526.90. I like what's going on. I like technically. Now, this is what I'm going to say to you. I'm going to say it again. Under 522, it better not do it for more than just like a split second and then go right back to 524.25. But if it holds under 522, none of what I'm saying is going to work out because it's used up its power, and that's going to be another completely different ball game. But if it continues like it's doing, and Apple's able to take out 528.28, remember that number? That's the high at 10 minutes past 12. About that was on the 25th of February. If it takes that out, then 528.28 is the key number, and then 529.75. on the 24th of February will be next. Hold on a second. You also want to look at Tesla?
Sure.
Okay. I'll be right back with William and Kevin in Sacramento. William in Singapore. I'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Hi, folks. We are back. We've got William in Singapore. We've got a very limited time here, and we've got Kevin waiting in line. But William is still there?
Yes, I'm here.
Yeah, okay. I just wanted to real quickly ask you, because I had a caller earlier, and I said that I would do Tesla when you were on, because I saw your list here. What position do you have in Tesla?
Okay, I have, in fact, I had a call position at 225. That was quite some time back. And I have closed my position, and then I shift it to 270, because the 225 have a delta of, about 30 and reach about 90. So I close up that. Took a profit, and then I switch it to 270.75. Obviously, now it's out of the money.
So now it's out of the money because we're down, right?
Yes.
So I'm expecting that there's a chance that next week there's a 265 round number high. That's going to be real key. I don't know if we're going to break above it, but I suspect that Tesla, TSLA, trading at 252. Down $1 right now is walking the 9-period moving average. If you can see my chart in Tiger TV, in the 9-period moving average in the 120-minute chart, I'm suspecting there's going to be somehow or other there'll be one more spike. I think it'll go to leg D just above 265, and I'm suspecting next week people have to start being real careful about the long side in the very hysterical stocks, and this is one of them. So I'm going to say to you, if you get a chance to get out of Tesla, I don't want you just totally to listen to me, but look at the action, because if it goes up, and as it goes up, it just weakens, and it starts to close the day on the downside. That's a tip-off that it's just a very extended. So be very careful here. I would try to get out of any Tesla calls next week or in the next couple of days. And I'm personally going to be looking at the put side. I don't know if I'll do anything for my subscribers in Tesla coming up next week. Hope that helps you, and I hope to speak to you soon.
Thanks.
Thank you, William. Good luck.
I'll do that. Thank you.
Thank you. Kevin, how are you doing over in Sacramento? Kevin, you there? A little delay. Kevin coming on? Sorry, Kevin, you dropped. I didn't mean to take so long. I'm sorry, Kevin. I didn't realize that you had a time limit. Hopefully you're listening. Kevin wanted to look at LinkedIn. Now, I don't know if you have a position in LinkedIn, but this is very important. LinkedIn is a 211 down $1.27. There's a pattern on LinkedIn that says it had better. It's got a peak D in the monthly chart, peak C in the 120-minute chart, a trough F in the weekly chart, and there's a pattern that I'm looking at that says in the weekly chart, if you're long, you have to see LinkedIn spike, and it's got to do it by next week. Next week, it has to spike above 226. That's 15 points above here. It shouldn't be much for LinkedIn, but if it's able to spike above that level, it says great. That's the trend line resistance. That is it's a channel. And it says if it's able to close above that by Friday a week, that's the first sign of real strength in LinkedIn that I've seen in a long time. I'd love for subscribers for us to get back into LinkedIn. We were in at one point. I'd like to go back in. I'm just a little nervous and cautious about it. It isn't acting all that well. Now, on the downside, if LinkedIn at 211 by Wednesday, this coming Wednesday morning, Tuesday afternoon, Wednesday morning, has taken out 204, that's very negative action. If it closes under 204, that's 7 points below, I would not be looking at it. So, Kevin, I'm sorry that you dropped. I should have taken you right away. I just wanted to get to those, to cover those areas. I like LinkedIn looking out, but I don't want to get into it until I find it's made a really strong basing period or it suddenly breaks out above that 226 level. Thank you, folks, for being here. This is Basil Chapman sitting in for Larry Pesavento. I'll be back at my usual time tomorrow, 11 o'clock till 12 for my Tiger Technicians. And don't forget my opening call, my daily service. Have a great day. Stay tuned for who have we got? Oh, we got the Diagnostic Trading Hour coming up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.